TMGM is my online trading platform of choice. I look forward to partnering with them.
TMGM, I'm in.
We just do a quick audio test, everyone. Chris, you good?
I'm here. Can you hear me okay?
Fantastic. Yep, perfect.
I'm here too.
Perfect, guys. All good.
TMGM is my online trading platform of choice. I look forward to partnering with them.
TMGM, I'm in.
TMGM is my online trading platform of choice. I look forward to partnering with them.
TMGM, I'm in.
TMGM is my online trading platform of choice. I look forward to partnering with them.
TMGM, I'm in.
Good evening and good morning to all of those attending, and hopefully those watching on YouTube later. We've got a very interesting webinar this evening with none other than Chris Tubby, who's been trading for over 40 years in the markets. We were going to address what's coming up and what's on everyone's mind over the coming days, which is the look into the US election. But before we dive too much in, a quick introduction to TMGM. And my name's Daniel Kruger. I'm head of partnerships here. With TMGM, we've been in the industry for over 12 years now. We're based here in Sydney, Australia. We're currently ranked 5th globally when it comes to traded by volume, and we're coming up on that $500 million mark. For TMGM, you can trade many different options with us, including Forex, metals, energies, indices, crypto. And depending on your country, you have access to up to 1,000 to 1 leverage on those. For those interested, we also have indices, individual stocks such as Tesla, Google, which might have some fantastic trading opportunities over the coming days, as well as UK stocks and some other options there too. When it comes to TMGM's background, we're currently supporters and regional partners of Chelsea FC. We're their former title sponsors of the Australian Open, and we look to make sure our clients are well supported like we support Chelsea. We're also currently running the 9th Global Trading Competition, where our prize pool is $468,000. Currently over 6,000 traders involved in that. Please head to our website if you are interested in joining and trying to take out one of those prizes. We also have a fantastic Refer a Friend competition running at the moment. For any clients who introduce TMGM, we'll be able to look after you with what you can see on the screen here. But enough about us, and moving over to Mr. Chris Tubby. Welcome, Chris.
Hi, thanks very much.
Give us a little bit of a background on your trading experience and yourself. Obviously, over 40 years in the industry.
Yeah, I mean, I don't want to take up too much time, but yeah, I started in the 70s. First 10 years, I was working for companies, trading commodities like soft commodities, cocoa, then coffee and such like. Really enjoyed that, very interesting. Ended up working for a great trade house. And, you know, I mean, I was eventually in charge of coffee, senior trader at the age of 22. And I used to do probably up to about 30% of the daily volume on coffee. With the trade house, so it was, you know, we had the physical as well as the futures options, etc. So yeah, I really enjoyed it. It was lovely, and the company was great. It was like a family atmosphere, you know.
What was happening at the time?
I'm sorry.
What was happening at coffee at the time?
Yeah, very interesting. Okay, so my old boss, he was a bull trader. His philosophy was, if you're bullish, you can buy as much as you like. If you're bearish, just buy less. So yeah, exactly. I'm the other way. I love to sell a market. So he was very fortunate because sort of just after the mid-70s, there was a frost in Brazil that wiped out the whole coffee crop. And the price went from £400 a ton to £4,000 a ton. And pretty quickly, as you can imagine, a very, very volatile period in coffee.
Thanks, Dan. Nice to have you here, Chris. I've traded EAs, built, those who don't know what an EA is, it's an algorithm, a piece of code that you build. I've done that for 20 years to assist me with entries, all those services here at TMGM. But Chris, before we dive into the election, you've traded multiple election cycles over 40 years. Can you share some of the major moments that you've experienced?
Yeah, I mean, not just elections even, but you know, I mean, recently we had one in the UK, and you know, it was a bit of a vote against the existing government, but the opposition got in with a very big majority, which is rare these days. You know, you don't really get that many. I mean, there's so many coalitions around, you know, France, Germany, and lots of other countries. I think people have got a bit bored with politics and they don't really see any benefit. So probably the last most memorable one's got to be Trump when he was elected in 2016. You know, there was some amazing opportunities. I mean, it's surprising that you end up with Hillary Clinton versus Trump then, and then, you know, 4 or 5 years later, you end up with Biden versus Trump. I was calling it the battle of the pensioners for this one, but obviously now we've got Harris instead.
Can you recall what happened to the markets as the Trump victory came in?
Yeah, I mean, the dollar came off to start with because, you know, he's such an unknown entity of what he was going to do and how it was going to plan out, like, sort of play out with him. Um, and I tell you, the sort of in the first year, he must have been very frustrated because he couldn't really get anything done. But that was because he didn't really understand politics. He understood business for sure, but he surrounded himself with businessmen. And so he was sort of lacking that sort of understanding of how to get things done. And again, when you come back to politicians, I mean, you know, they're a sort of a strange bunch, if you like. Yeah, but I mean, over time, he certainly got it. And, you know, the first year was very frustrating. I mean, the first thing he tried to do, which was obviously a Republican thing, was repeal Obamacare and all that, which was never going to, in my mind, was never going to happen because everyone's so passionate about that. And so it was always going to be a bit of a strange one. Now, then sort of he worked out, he took a business approach. I always wanted to see a country run as a company, and he basically did that before. And you know, we've seen him in action. He's one of the only US presidents that actually hasn't caused a war or actually been involved in one to any degree. So it's going to be interesting, whoever comes in this time, to how they're going to manage with obviously what's going on in the Middle East and with Russia and Ukraine as well.
Do you think we'll have, Chris, do you think we'll have similar trading opportunities as we did from, say, 2016 to 2020, even though, say, indices and gold and plenty of other things are kind of at those all-time highs? Do you think we'll see, you know, more of the same, or do you think we'll be more of a rocky patch over the coming 4 years, whoever wins?
I think for the rest of this year, we'll probably, you know, it's just going to stay as it is. I can't see too much different happening. You know, central banks are cutting rates slowly but surely. But I think next year is going to be a bit more challenging. I think that the stock market can come off next year. Gold, I'm not so sure. I mean, it really depends. That, you know, sort of when you look at all these geopolitical issues going on around the world, it makes it a little bit more, you know, a haven trade. And again, the same with the dollar, because, you know, I mean, whoever wins the election, if anybody wins the election straight off, and that's going to be something else to consider, because, you know, if you believe the polls, and they're usually wrong anyway, but if you believe the polls at the moment, I mean, it's almost 50-50.
Yeah,
you're expecting a bit of legal battles to pursue after the election.
Yeah, so I think there could be some legal challenges, some recounts. I think it could be a little bit of a surprise, and I think Trump might just edge it. But then, even if he gets in, is he going to have control of both houses, or the Republicans have control of both houses? Because again, that's another problem.
Do you think those sort of legal challenges and anything through the courts would, you know, my 2 cents on that, it might create some extreme volatility, that anything that's not priced in is just going to be bouncing around all over the place over those days after the election?
Yeah, it could be days or weeks. I mean, it depends how quick they get these legal challenges and recounts done.
Was it 2000 with Al Gore and Bush? That was a legal challenge, wasn't it?
I mean, even the last one with Biden, there was something going on there as well, because Trump wouldn't admit defeat for ages.
Okay. Do you think, you know, obviously with the information that's coming out now, you know, the speed of information, have you noticed a lot of changes over the years with, say, trading these elections and other large events with all this technology at our hands?
Yeah, the problem now, I think, for a lot of traders, especially the younger guys coming into the industry, it's info overload. There's too much information out there, and it's knowing what to focus on and what not to focus on. And of course, social media can be a blessing, but it can also be a terrible thing for guys coming into the industry.
What timeframes do you trade with all that volatility? all that information coming through all the time?
For me, I stick to a 30-minute time frame, but it depends because on candlesticks, I mean, most people use candlesticks, and I'm no exception, but I use other ones as well. So I use candlesticks for sort of my trends. I add pivot points to them because I like to sort of see intraday what's going on. I might use Fibonacci as well, but I also use Heikin-Ashi. And I will drill down on the time frames. I'll start with a daily, but I will drill down to probably about a 15-minute with that, because all I'm looking for with that is just market sentiment. And that shows it very well. And then I use point and figure, which doesn't actually have any time element to it whatsoever. And that's just all pure price action.
Yeah, you get a good directional bias with that.
Yeah. So, I've got one that sort of really identifies horizontal rejection levels. I've got one that's going to show me where the trends are with intraday opportunities, which is obviously candles, pivot points, and such like. And then as I say, for Heikin-Ashi, it's really just seeing market sentiment live. And again, if you adjust the time frames, you can see that very short term, or you can go out to the much longer, bigger picture as well. Because I trade multiple sort of times.
Are you doing all these time frames every day, or is it like certain market conditions that you decide to use one versus the other?
It depends on the market conditions. It depends on the product that I'm trading as well. And it depends, to be honest, if I'm too busy to sort of monitor the market all day long because I'm educating other guys to trade. So I don't always get the luxury of having all day in front of the screen for trading. But, I mean, I love it all. So I just, anything to do with trading, I'm all over it.
Yeah, excellent. What lessons would you share with traders who are facing their first election this year?
Just be very cautious. Take your time in picking your trades. Watch out for volatility, because obviously that's going to increase. I've got something that I call the 3 Vs, which is volume versus volatility. So it's just down to your position sizing, really. So, if I'm if I'm going to go into a market, I'll stop quite often. If the volatility increases considerably, I'll cut my size in half, and then I'll have my stop loss twice as far away. So the potential loss is still going to be the same, but I'm just giving my trade more room to breathe and work for me. I always tell my guys that probably about 85% of your trades are going to go against you before they go for you. Of course, if they're going to go for you.
Yeah, you don't want to be stopped out on a low volatility, do you?
No.
With the election running and the market factoring in a Trump win, what do you think will happen if Harris gets across the line?
She's going to be unknown. It's a strange thing. So, I mean, I don't know if you guys would know, but the only thing I know about a vice president is from what you see on the films. So, but they don't seem to actually do that much. They're more like first reserve. If something happens to the president, you take over. But otherwise, do they actually have that much input? I don't know, because I'm obviously in the UK, but I don't know about American politics. Although I follow American markets deeply. But so for me, does she have any input with Biden up until obviously now when she's taken over from him to try to become president? So does she have any policies? I mean, I've heard bits and pieces from her. But she's untested, and Trump's a bit like.
Have you looked at their stimulus policies? Because they're both going to spend. Trump's going to spend on one aspect of the economy, which will be stimulating business, and she's going to stimulate another section of the community through packages and trying to support new jobs.
Yeah, I mean, she seems much more sort of probably for the public, if you like, whereas Trump is obviously more business orientated. He's looking to cut corporate tax and stuff like that. I mean, if you look at the end of the first year when he was in, he cut all the taxes, which personally I think is a better solution than doing QE at times.
I think he's sort of pledged to cut corporate tax to 15% and a number of other business positive policies that I guess the market's probably priced in, which would be interesting on Roland's point there. If Harris does get up and even take away Harris as the vice president and just say the Democratic Party gets up and their platform gets up, how would the market react to that? And, there's an interesting point that Roland brought up there. Do you think there would be further inflation from either of these two policies with their spending?
For Trump, definitely, especially if he's, because what's his favorite weapon? Tariffs. So, he's going to introduce a lot more of them. He's going to put a lot more on China, it seems, but not just China. As he's aiming for the EU and lots of other countries. And those
French
tariffs
wine,
are generally going to be a minimum of 20% upwards. So, that can be inflationary on its own.
Yeah. Do you think the inflation fight is won at 0.2 per month?
I think it's stabilized and I think it's good. The risk that they've got now is disinflation. A lot of countries. I think the US is in a slightly more positive area than, say, Europe, for example. And the reason for that is obviously all that COVID cash, all that stimulus that was put in over COVID. All those trillions. The Fed went from probably about 3.6 trillion on their balance sheet to 8.9. And that was without everything that the actual US government put into it. So again, they sort of, we're trying to control inflation, but they're partially to blame for some of that inflation. But I think that, overall, that inflation is obviously better than it was. We've all seen such sort of massive increase in prices. I would say food has probably been the biggest of all, but companies know that we need to eat, so they can afford to do that. And of course, you've got that greedflation, you've got shrinkflation as well. I'm a chocoholic. I love chocolate, so all I see is the size of bars going smaller and smaller.
Yeah, that's true. That's true. To toothpaste too, all the products are now smaller.
Yeah.
And I guess off the back of that inflation, the other thing that I guess for the average person, we've all seen our chocolate bars getting smaller. The other thing that the average person, I guess, is deeply entwined with is the interest rates and how that will play out. I think that's a huge thing. Where do you see that heading over the coming, 12-month period?
Well, of course, straight after the US election, we've got the FOMC meeting, and it's actually been pushed back a day, guys. So just remember, the rate decision will be a day later than usual this time round.
Will that be a cut this time?
Yeah, it's going to be 25 basis points, I would say. I was right last time, by the way. I was saying for probably about 2 or 3 months in my daily newsletters that it was going to be a 50 basis point, the first one. And I'll tell you why, is because I think that they were so slow to put rates up. They didn't want to be accused of the same issue on putting them down. And of course, when you've got inflation coming in and growth, if you're a little bit late to the party, all you're seeing is the economy grow a bit faster than you'd like to see it. When you're cutting rates, it's because you're feeling that there's maybe a weakening of the economy, and you definitely don't want to be accused of being late to the party for that one, because that's not going to bide well. So I think that you're going to see 0.25%, and of course we've got the Bank of England this week as well. I'm not so sure about them. It's a bit more of a knife edge which way their one goes. Rate wise, I think I think trying to feel that we're going to get back to the 0.1%, all this really dirt cheap money is just never going to happen again. Maybe, but not for decades in my mind. Because, this inflation has really scared the central banks. So they're going to be more cautious about the cuts. They're going to come, but they're going to be more controlled, and they're going to have a higher base. The lowest I expect to see rates is 3, possibly 2.5%. 3% maybe by the end of next year, and then possibly 2.5% sometime in 2026, depending obviously how the economies are going at the time.
If we're sitting at say 3%, like you say, where do you think the inflation rate will be?
It's a good question. I probably about 1.5%. Yeah, it is. But the, I think the problem now is, you know, okay, with all these interest rates up to 5%, did they really kill inflation? They may have slowed it a little bit because it only impacts people that borrow. Actually works as a positive for those that have actually got savings. I mean, look at Apple and some of these magnificent seven, the amount of mountains of cash that they got. They've been earning 5% for actually not making anything at all. But
Yeah.
obviously, you know, over time, now, you know, consumers are having to dip into their savings. And okay, you know, we've all got that feel good factor because when we look at stock prices and everything, but there's got to be some sort of downplay. And, you know, this greedflation from the companies. I mean, you know, you go back to pre-COVID, profit margins were probably what, 10, 15% tops. You know, it was real competitive markets out there. But since COVID, you know, companies, oh, we've got inflation, let's add a bit on for us. And, you know, that suddenly leapt up and up, you know, 20%. In the CPI moved up 20.1% in the US. Food inflation was over 30%. And you know, when you look at sort of like the jobs and all that, I mean, a lot of guys, you know, on the lower incomes are having to take 2 or 3 low-paid jobs just to sort of pay the bills.
On that jobs note, where do you see employment data? You know, obviously, both candidates offering a vision of employment and helping out various you know, sectors of the economy and of the workforce, and with historically low employment data, you know, where do we think we're heading coming into the next 12 months with employment?
I think unemployment has to go up. You know, but I mean, the US have got 4.1%. Even if it went up to 5%, is that a disaster? Not really, because it is at sort of record lows. But if you look at the sort of the jobs data, I mean, first of all, I mean, if you look at sort of from May last year to May this year, the Bureau of Labor Statistics in the US got it completely wrong. They overstated the amount of jobs that had been created by 818,000 jobs.
That was a large bias. Why was that in there? Why would they calculate it so incorrectly?
I don't really know, but you know, the thing for me, you know, I've been writing about this for quite some time, is how much can we trust the data that comes out?
Yeah.
And surveys, for example, I mean, surveys, okay, you know, there's lots of questions around them. Households and businesses, it always the same ones. Who actually fills that in, and do they really care with the answers they put on there? And the responses have been dropping down. I mean, for some of those surveys, it's just over 30% responses. And yet you're taking that as a broad view for the whole country. So you might be basing that on less than 2,000 responses out of a whole population. It really does feel that way.
It feels that way with election data too and survey data. It all seems to be a reluctance to really give the information over anymore.
Or it's just manipulated. Let's be honest. You know, there's so much of it going on. You know, I suppose when you look at all the news media around the world, there's probably only about a handful of people that own all of that these days.
Yeah, and I guess there's also what we're touching on that point. What do people actually? Are they comfortable they're going to vote for a certain, and to say they're going to vote for a certain candidate? I guess with Brexit was an interesting one with that as well. The polls were all picking a loss for Brexit, but because of those people who didn't want to say they were going to vote for Brexit, and the same obviously with Trump in 2016 when this all started, those quiet conservatives, I guess, took those two initiatives over the line. So
it's true. I mean, if you look at Brexit, I mean, on the eve of Brexit, cable went up from 147 to 150. I know, because I was scared up selling into it, because I'm like, if it's already priced in, you know, what have I got to lose here? And I just had that little inkling that it could have been a Brexit, but it was going to be close. And of course, you know, when it was a Brexit, I mean, the pound crashed the next day. The interesting thing is the stock market went up.
Yeah.
What was interesting about it is we just lost our biggest trade partner in the world, and yet the stock market was going up.
Yeah.
But why was it going up? And it was because the currency had become so cheap. I mean, it lost sort of 10, 15, then 20% of its value. So for overseas investors, it was an absolute bargain. They was buying all of these stocks at a discount.
And I guess coming into the next days and weeks ahead, with some of the interesting, peers and things we can look at trading, what would be your picks for clients and traders out there to have a look at trading over the coming weeks or even days?
Well, I mean, the dollar's going to be a main one, obviously, for me. So can I just make one more point about the unemployment?
Of course, go.
And that is because, we look at this rate in the US, it's 4.1%. But if you look, you're seeing permanent jobs going down like that, and they're all being replaced by part-time jobs. That's why it looks so strong. But I don't believe it is that strong.
And with that data you were talking about, so Roland, I just want to bring up this thing about.
Talk about the jobs. There's been a lot of speculation. A lot of those jobs are government jobs and not private sector jobs that have been filling the hole recently, and that's why rates had to be cut. Did you feel that there's more government jobs being made than private sector jobs in the US?
Well, you can see that through the ADP that comes out on the Wednesday versus the NFP, which comes out on the Friday. So that sort of reflects that difference in the two. How accurate that is, I don't really know. But as I say, data's okay, and it gives us a guide, but I don't think we should take it as pure fact these days.
Yeah. Well, if there's no guide in the data, what about just the price? Is the price of the market correct?
Yeah, I mean, the price is, you assume price is always correct, but it doesn't stay at one price for long, as we've seen. And I mean, coming up with the election and all that, it's going to be interesting because again, which one gets in? If Trump gets back in, then you almost know what to expect from him. And if you go back to his 2016, his manifesto to get elected, when he got elected, he actually tried to almost line for line fulfill that manifesto. Now, how many other sort of presidents or heads of state have you ever seen do that probably over the last 20 years? I can't think of hardly any others that have done that. I mean, politicians just, especially if they want your vote, they just tell you what they think you want to hear, so you vote for them. And then when they get in, they've probably got no intention of doing half of it. But with Trump, he actually made the effort. His slogan, "I'm going to make America great again." But of course, the problem with that is it comes at a cost for the rest of the world. It's not all a one-way street. So he's at the I mean, again, as a businessman, he doesn't like to be seen to be taken advantage of. But that's a place that America's always held. Is we help other countries.
Yeah. We've already spoken about indicators, what you're using. But going into the election, are you focusing on Forex? You mentioned the US dollar. You're doing commodities. You're using the stock market.
I think gold is okay, and definitely the dollar and different currencies against that, and also the dollar basket, the Dixie as well. I mean, if Trump gets in, I'm quite interested to see what's going to happen to crypto and Bitcoin because 2016 he was pretty much against all of that. This time round, he's really pro for it. So I can see potential for that to have a big rally. I mean, when you look at the polls, every time it looks as though he's going ahead, you see Bitcoin have another spike up.
Yeah, it's true.
Once again, Bitcoin into all-time highs there too, I think.
It went over 73,000.
Yeah, it's come back into play. I saw some of the data on the back end over here, and a lot of clients starting to pick up Bitcoin again coming into the election, because as you mentioned, those spikes pushing it to all-time highs, and obviously a lot of work to keep it running, but it's on everyone's lips. So the two big things we're seeing on our side, just for anyone who might be interested, is gold and Bitcoin. It's the sort of the really interesting inflows where people are having placing their trades into.
Yeah, I mean, gold's had such an amazing run this year already.
Yeah.
And you know, if there's any doubt about what's going, you know, especially with all the tension with two wars going on and such like, you know, where are you going to put your money? You know, where do you feel that it's safer? I mean, can't say it's safe. I mean, as such, but you know, you just want to deposit it somewhere where you feel comfortable with it at least, and at least gold is tangible.
Are you following
Yeah,
the US yen at the moment?
I'm sorry?
Following the US yen at the moment?
No, not too much. No.
No, because it's had a big run of almost 10% from its last correction into this Trump trade. You're not expecting that to move?
Yeah, of course it's going to move. But again, it's you know, the election itself is it's a matter of it could get really messy if it's that close. You know, hopefully there's going to be. Well, I'm hoping that Trump wins. Because you know, if Trump wins, then you've got another 4 amazing years of markets. So you know, I'd be looking forward to that. And of course, you know, sign up for his Twitter account because you get news there before you get it on the news services.
Obviously, we've looked at what we can have a think of trading and going into our trades for the clients and ourselves. Even I'm sure we will be trading on the day. Protecting our downside's big. You know, the risk is huge, especially in the volatility. And if things don't go the way that everyone expects in any way, shape, or form, be that legal challenges, you know, anything can happen. Let's be honest in these elections. Position sizing, I think, is something that personally, you know, I see a lot of clients potentially struggle with. How would you advise anyone sort of listening about how to, you know, position themselves accordingly in this market?
But you know, you got to look at the volatility, but you've also got to look at the expected volatility. Don't just assume that what you're seeing today is going to carry over for the next few days or weeks, depending how long this gets to sort out. Because if that volatility is going to increase, as I say, you've really got to reduce your size down and have those wider stops. That's what I do. The only other thing that I tend to go into when you get this sort of potential for really high volatility is go into the options market because I can buy in there. I don't have to micromanage my risk then. But otherwise, you know, when I'm just going into my positions, I'm going to cut my size down so I can have a wider stop, but without potentially increasing the potential loss that's involved. You know, what you don't want to do is go in the same size, have a wider stop, and find you're going to lose a lot of money in that one particular trade, which is going to really damage your capital. But the other thing as well is if you're going to have a wider stop, what you've got to make sure is that the potential's there to get your profit from that trade as well. You know, my minimum risk reward is 2 to 1. So I need to make sure that if I'm going to have a wider stop, I could still get twice as much profit if I'm right.
Excellent. Are you doing any other like more sophisticated strategies like hedging, going long the US, Euro US versus the US and then short the pound, trying to see if you can get some kind of advantage?
No, you know, but again, it's a good point because I suppose if I was going to do something like that, I'd probably go into dollar yen or maybe against the Swissy, something like that, something that's got a little bit more sort of, you know, if you're going to go in and look, if you're looking for a currency that you expect to go up, you should also be looking for one that you expect to go down. So you partially hedge yourself. If you're wrong on one, hopefully you're right on the other one, which will keep you in the trade long enough for it to turn around and you get your profit. Of course, if you're wrong on both of them, then you're stopped out regardless. But, you know, again, it's just a form of hedging. It's just a way to do that. I haven't really traded much in the way of US stocks recently because I just want to sit and wait and see what the outcome of the election is going to be before I take any new views on them.
I think something like Tesla would have a let's say an interesting day on the market. Obviously, Elon heavily behind Trump, Elon Musk heavily behind Trump. I think there could be some pretty big swings there. Roland, you saw the other day. What was that swing we saw on Tesla?
That was the job report out of Tesla.
Yep.
It was out of the blue. It's outstanding. So yeah, like you said, if Trump wins and he truly does become part of the cabinet, well, you've got to assume that the Elon's stocks are going to move.
Or vice versa.
You know, but Tesla and car companies in general are going to benefit from a Trump presidency anyway. He's already said he's going to help them out.
Yeah, excellent.
I think that could be some interesting one there. One last thing on this positioning, from a personal standpoint, how long are you looking to stay in trades in these extremely volatile markets? You sort of looking to in and out, or are there any positions you might hold for a longer time frame at all?
Yeah, I mean, my long-term ones are going to be options anyway, so that but I buy the options so that I know it. Buying an option is just like having a guaranteed stop loss. But I think for the other ones, I don't think you've got to wait too long until you've either got your profit or your loss, because they're just going to be moving around so fast. That volatility is going to be there. But again, especially for the guys just getting into the markets, we've got a saying, sometimes the best trade is no trade. So if you're unsure about what to do, then wait until you are.
It could take some time, couldn't it?
It can, and sometimes the first experience of this is one to sort of be an observer rather than be too involved in it, or go in with a very, very small amount of cash with not so much tight stops, but just limit the amount that you're prepared to lose over the next week or so, so that you don't damage your capital too much. Because it's very easy to get carried away, and no revenge trading, guys. If you're sort of a bit prone to that, if you take a hit, then have at least an hour away from your screen and then come back and then prepare yourself again, or just take the rest of the day off.
Can you expand on the psychology of revenge trading? Like, tell the new people of what that is.
Yeah, so revenge trading is where you take a loss and you feel that you've got to try and make that money back as quick as possible. So you dive straight back into another position. And generally what happens then is you take another loss, so you dive back in again, and all you're doing is just compounding the issue. But I think there's actually two types of revenge trading. That's the most natural and obvious one. The other one is where you've got a position that actually works in your favor, but you get out too early. And then, of course, you really regret it because the market keeps going and going and going. Oh, my God, why did I get out of that? And then suddenly you feel like you've actually lost money rather than made money. And then you think, no, it can't go up any higher. So you start selling into it, expecting the market to come down. Or what you're really doing is hoping it will come down enough so you can buy back where you originally took your profit, so that you can say, oh, didn't I do well? I got the top and the bottom of the market. But the majority of the times it's just going to keep going, and you're just going to throw away everything you made on the initial move anyway. So the revenge is against yourself for getting out too early.
Yeah, it's your own personal demon, isn't it?
It is, yeah. Well, I mean, trading psychology just in general, I mean, 50 years in the markets, and I've got rid of ego and hope, but I've still got fear and greed. But I've sort of developed my own way to pacify them. So I sort of build my positions rather than go all in. As I say to most of my guys, I say, 85% of your trades are going to go against you. So I think, well, why don't I take advantage of that? Rather than go all in and then see the market come against me first, why don't I go in with smaller size and then just add as it comes down, as long as I've got a level where I believe the market's going to reject it. So I build that position, and I do the same when I start to take my profits. So when it's going in my favor and I start to take my profits, as long as I start to take some, then fear's happy, because otherwise the market could crash and I lose all that opportunity. And greed's happy as well, because I've still got some left, so that I'm milking it, and I'm going to take it as far as it'll go. And then quite often I'll exit 80% of my position, and then I'll run the last 20% with a stop loss in to lock in some of that profit, and then see how far the market really wants to go.
Yeah, that's
obviously
good.
From our side, we see that all the time, rolling with our clients.
I can relate that myself. I've lived that world. I've lived that world on all fronts. So
our clients, ourselves, we've all been there. And I think the takeaway for anyone listening, if you've got some profits, put them in the bank, take them off the table, and then you can still let some run, but put some of those profits aside, because the amount of times, I've seen personally clients who've done extremely well on a trade, they're in a great position, they really should have been taking some off the table, like Chris said, and then something comes out of the blue in these volatile markets, and it can clean you up and take away that initial investment too, as well as the profits. So like Chris said, take it off the table.
I've seen pro traders do that as well. They've had a lot of money on the table, and they've ended up getting stopped out.
Yep, that happens.
And also, if you're having a good day, is protect some of that profit as well. You'd have an idea of what you'd like to make in a day. When you get over that, maybe just risk part of the excess, so that you're going to end up with a positive day regardless. Just risk some of that excess in the next trade. What I do is, and encourage my guys to do, is just go into that next trade. If it's a winner, go into another one. But you only risk a small amount of what you're up on the day, not all of it. The moment you have a losing trade, then that's when you say, okay, my luck's just run out, and now stop for the day. Come back tomorrow and start again.
Is there a certain number of trades or anything, or is there anything you look for specifically like that, or is it just like one or a certain amount of capital? Is there any markers you're looking for personally, and perhaps?
Or is there a time? Is there a time that you do it? Is there a particular market entry that you're looking at, like the European Open, the US Open?
I trade lots. Sometimes I trade Asian hours. I don't sleep a lot, so even though I'm in the UK, I don't go to bed before 1, 2 in the morning, and I'm back up at 5:30, 6, 7 because I'm preparing my daily newsletter. So, when I'm doing the newsletter, I'm reading all the reports, which is sort of filling into my head and helping me with my bias of what I'm seeing in the markets. So that I'm starting to formulate, and then I add that to my analysis. The way I always look at markets, it's the fundamentals that are going to determine the trend and the volatility. We use the technicals to help us identify, the support resistance levels, where to place our stop losses, and help us with our timing for those entries and exits. So in the US, I'll trade sometimes, mainly oil, and oil strategies, and then morning sessions in the UK. I'm then looking just more gold, maybe a little bit of oil still, and then some currencies. So the dollar against the euro, the dollar against the pound are my main ones, if I'm not doing the Dixie.
Is that based on like the trend you've seen coming over from Asia, or is that just like standard entries for you in the morning?
Sometimes Asia can be a bit funny because obviously it's very thin in Asian hours. So, if you look over the years, I think most of the big sort of moves, when you look at a contract that's moved, say 20% in a year, a lot of that actually happens in Asian hours because it can be pushed very easily during those hours. And then less in Europe and even less in the US. But, so the Asian hours are just usually a sort of a follow on from what happens in the US. Europe sort of sometimes ignores what happens in Asia. Sometimes it follows it. And then, of course, when the US comes in, that's the driving force of markets, really. And again, sometimes I prefer the mornings, or I used to, shall we say, especially when the trading floor was open. I used to work mornings when the trading floor was open. I used to make my money in the mornings, jump on the train, go home, pick my kids up from school. And the rest of the day was family time, which, is something you either do or you don't, and you can't replace that. So I was quite fortunate with that.
Well, that sounds like a nice lifestyle.
That's why we trade, isn't it? Because we can trade in the hours that we want to trade. We don't need to be trading 24 hours a day. Quite often that can work against you. It's a matter of practicing, especially with a demo account where possible, hone those trading skills, work out what time of day works best for you. Because for a lot of people, they've got to fit it in around their day job as well. So, but for others, and then, you know, I would say if you're new to trading, work out what asset class is right for you as well, because they all move at different paces. Find one that you can connect to and then build the rest of your trading around that.
Yeah, I think that's good. I like that.
Do you think there's any of those asset classes you spoke about for a beginner, someone who maybe has just got a demo account fired up, you know, new to trading? Let's say you've got to pick one asset class for them to have a look at and trade and to begin their trading journey on. What would you suggest, Chris?
I would probably say FX. It's a little bit, it trends, but it's not as volatile unless obviously there's some news or data coming out. So I find it a bit easier. I do a lot on LinkedIn, and when I say, you know, FX is a bit slower than the rest of the asset classes, the FX traders get a little bit upset with me sometimes. But it's like, hey, have you traded NASDAQ or Bitcoin? And they go, no. Go, well, you trade them and then come back. But, you know, it's a great starter set because there's so many different pairs that you can trade. And, you know, they're very liquid as well. So you've got everything you need there just to cut your teeth, get used to trading, experience putting your stop losses in, your take profits. And then if you find it's too slow, then you can look at something that's medium paced. And, you know, if you like the real sugar rush, then you can go for the fast ones.
It's probably good to control your emotions though. Roland, did you find when you started out is that what led you to your algo trading experience? Was it the emotions and controlling those emotions and stuff, or what led you down there?
That's really where we ended up, because I was never a good trader at having patience and waiting for that correct entry.
You wanted the sugar rush.
I wanted the sugar rush, but also it would allow you to finesse your stop in advance, so you couldn't make mistakes. You know, you knew when it entered, you were risking exactly the right amount of money that you were expecting to risk. And again, the risk rewards that you mentioned, 2 to 1, you can really set that in stone and walk away. So you do your assessment like Chris would do of the global markets, find your pair, set up your EA and allow it to go long when the entry came. And then you would just walk away and accept your fate on that. It's just how I managed to make money without being overly emotional about what was going on.
I think patience is a great subject to bring up as well, because you know, it's so necessary in trading. You know, I was never the most patient when I was younger, for sure. I was earning a lot of money, and all I wanted to do is, if I wanted something, I wanted it right then. And we didn't have the luxury of Amazon then, so you had to wait for it. But you know, now, but in trading over the years, I've definitely learned patience. Buffett, you know, one of the things that he loves as a quote is, the market is a way of transferring capital from the impatient to the patient. And I really like that. It's, you know, because it's so true. You know, let the market come to your price rather than you go chasing the market. And of course, you know, his first 2 rules, guys. Number 1 is don't lose money, and rule number 2 is don't forget rule number 1.
Which is, I think, a great way to think about what we're looking at over the coming days. Making sure the takeaway I've got from this conversation is, and something I'll be personally keeping a big eye on, is that risk. You know, making sure we're going into it open-minded, patient, and really minimizing that downside, because there'll be so many trading opportunities. You don't want to get wiped out by one, right? You know, and that's from watching many clients over the years, hundreds of thousands, over books, seeing the whole client book. You know, patience, I think, Chris, is something you've nailed there. Being able to watch it and just come back for more if you make a wrong decision. It's not the end of the world if you get it wrong, right?
Yeah, I mean, my philosophy is always, if you know, if the day's not a winning day, then tomorrow's another day. Just come back and start again. But you know, avoid those revenge trades and just, you know, just be patient, and there's always another opportunity.
Yeah, that's what I like about markets most. Yeah, there's always an opportunity around the corner somewhere.
And Chris, firstly, thank you for everything today. We've got a short amount of time left, so I guess we'll finish on, you know, what I think would be interesting, which is, you know, your prediction. I think earlier you touched on you're thinking Trump's going to win it. So I guess you know, your prediction for the coming days. Where do you see things?
I'm hoping Trump will win it. I think Trump will edge it. Again, I just don't believe in the polls. They've been so wrong all the way through. But I think that, for the central banks, again, I think you're going to see a little bit of a divergence after the election. First thing is Powell going to keep his job because Trump's not so keen on. Don't you think that central banks have got too much power?
I think that they're a bit of a blunt instrument in many cases, and they should be politically neutral. But even in Australia, I definitely see that there's some interference going on. I'm not sure if you follow it down here, but it does seem to me like they sort of control a lot of the country, and the decisions they make control a lot of the outcomes for the average person.
Yeah, I mean, I put it on LinkedIn one day. I went, if you've ever been fined for manipulating the markets, then ask for your money back. Because, when you look at what the central banks do with all that stimulus.
It's pure, yeah.
And when you look at it as well, where do they get this money from? They just create it out of thin air.
Yeah,
which is obviously the issue with debt.
Yeah, it's amazing. But so I'm going for a Trump win. I think it's going to be really good for the US over the next 4 years. I'm really interested to see whoever wins, how they deal with the two wars that are ongoing, because that could again have a big impact. Because if you look at sort of the Red Sea, that shipping not being able to go through there, for example. They don't want to risk it and going round. I mean, that adds about 3 weeks and a lot of expenses to all of that. And again, if you think about it, 80% of all goods that are exported go via sea.
Exactly, and obviously oil being a huge thing, and potentially one way or the other, maybe the Russians come back into the fold and sanctions are removed, and instead of the dark fleet shipping oil around through India and other such means, that potentially, the oil comes back into the market, and if the war in the Middle East dies down as well, obviously that could be send oil south, like we saw.
Yeah, I mean,
over the last Trump presidency.
Yeah, I mean, oil is one of those things where you can always argue why it should go up. You can also argue why it's going to go down as well. For me personally, at the moment, all I see for up pressure is the tension that's out in the Middle East and the ongoing wars. Otherwise, it probably would be a bit lower. I don't know how low, but a bit lower. But you never know.
You can really see the war into Friday's oil's been rising by a couple of dollars and then letting it go on the Monday open. So
yeah, they've done that for the last 2 Fridays. Yeah.
It's been quite noticeable.
And especially now that Iran have said that they will, they're planning another attack on Israel at some stage as well, after the election, but before the president's inauguration.
Yeah, that's that stuff that can really send those markets into huge gaps and things like that, and tie back into that risk management and position sizing. Another thing,
it's so important. So important.
Watch yourself into the weekend for any clients listening. Always try and, my personal opinion is to try and take that risk off the table into the weekend, just in case, because we can see some huge gaps open up when these events can happen.
Yeah, I mean, I don't mind a little bit of risk over Monday to Friday, but come Friday evening, I want to have a great weekend, so I want to flatten my book off and remove the risk, because when you look, some of the biggest moves ever are over the weekends. I mean, I can remember when the Saudi oil pipeline was hit by a drone years ago. Oil closed bearish on the Friday night, opened up over $6 higher. Now, you can have a stop loss in there anywhere you like, but you're getting filled $6 higher.
Not taking into account any spreads that might be a bit higher in those early sessions, with thin liquidity and people pushing around those first parts of the market as well. Very volatile, obviously, early Monday mornings, and spreads are something to always watch out for.
Absolutely.
It's a dangerous time to be in the markets, and we want to be in a position where we can make a smart trade rather than chasing our tails on a Monday morning.
Yeah. Absolutely. And you know, there's some great books about trading psychology if that's something that you really suffer from. The one that I always recommend is Trading in the Zone by Mark Douglas. It's a great book. I've never found anyone that hasn't enjoyed that or taken something from it. It really does sort of open up people's minds about the psychological aspect.
It's huge. But obviously, Chris, we're coming up to the end of our webinar here today. Personally, been a really insightful chat. Sort of cleared a few things up for me personally that I've been, you know, thinking about. You know, I think there'll be a lot of opportunities for traders. You know, these are kind of these interesting things we've got to watch out for. You know, this happens once every 4 years. It's the big leagues, as I like to think about it. You know, these events are huge opportunity. I think we've all discussed, but the downside is manage that risk. I'm telling anyone who's listening, please manage your risk. If you get it wrong, you can live another day. But thanks so much for coming along, Chris, and Roland, for your insights too. It's really insightful.
Thanks, Chris. Thanks for coming along.
Thank you.
Really
Thank you for asking me. Really enjoyed it.
All right, team. Thanks everyone who's attended as well. We've very much appreciated those who've listened in. We'll also be adding this up to YouTube. So for those who you know, want to catch up for the election, this will be up on YouTube and you can watch from there. Apart from that, that's it from us. And thanks very much for everyone. Have a lovely day and all the best in the markets over the coming days. Whoever wins, there'll be some huge opportunity there for everyone.
Yeah. Good luck, guys.
Yeah. Good luck, everyone. Thank you.